Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 12:15 UTC. A big shout out to everybody that's joining us live today, and also for everybody that's watching this on recording. As always, guys, if you are watching this live, please do let me know if there's any issues with the sound or with the visuals. So, if we're all good to go, guys, what we're going to do is we're going to try and keep this theme of keeping these a little bit shorter, and we're going to focus on Bitcoin today. If anybody's got anything specific they'd like me to take a look at or cover, please do let me know in the chat. But the focus today is going to be on Bitcoin and the fact that we've got an incredibly news-driven week ahead of us, okay? So, what I've done is I've actually just kept this on an hourly chart. Let me just go full screen so you guys can see this a bit clearer. So this, I thought I'd keep it on this level with these annotations on, and then what we're going to do is we're going to get rid of all of these off the stream. We're going to go to a higher time frame, and then I'm going to do a top down with you all, okay? Just to let you kind of plug into what I'm seeing in here and what my thoughts are, okay? Again, it isn't suggesting any of you copy this. It's just purely some insights into how I look at the markets. So CS Lychee, hello. Hey, buddy, welcome to the stream. So as we can see at the moment, there's a little very small, low risk, or not low risk, but low position size short here. Now, the reason for this is I don't typically trade weekends, but for me, this set up really well when we took out these highs over here. I put it out, I think, on Twitter and certainly in the Bitcoin report in terms of what I'm looking for in terms of liquidity, all right? So to really break it down in a simple fashion for anybody that maybe hasn't caught the stream before, what I'm looking to do is I'm looking to trade extremities. So, for example, here, when we sweep certain key highs and lows, but most of which are derived on the higher time frame, which we'll zoom out very soon and kind of take a look at. But the idea is that if we see a key level interacted with, right, and immediately we expect some kind of reaction there, a pullback to the downside, a search for liquidity lower down, then what we would look for here is the break of this structure, yeah, so the break of this high. And then what I'm looking for is for the low that takes the high to be closed below, yeah, and then to trade down to liquidity lower down. So the liquidity lower down is simply stop losses. People that are long here, for example, their stop loss, or here, stop loss would go under the price swing low. If you're long here, your stop loss would probably go there. And it's the same for people that are short. Now, what a lot of people fail to consider with this is if you open a short position here, your stop loss is a buy order, right? So that's always worth considering, right? Same as if you open a long position down here, your stop loss is a sell order. So when we interact with these levels, we can often see reversals. And people often ask why, because it's quite counterintuitive, right? And say, well, hang on, if price is coming up into a lower buy orders, surely a lot of people are buying, which is absolutely right and a very true way to think about it. But what you need to think about behind it is if you have a large body, institutional buyers or smart money concept as ICT would call them, for example, or even if you're just thinking of them as buyers and sellers, right? Then if you want to go short up here, yeah, and you want to push the market up there, what you want to do is you need to create a lot of liquidity. If you've got a load of sell orders you need to fill, you need to find the buy orders, right? So buy orders are up here. You want to push price up into those, and that way you get your fills because these are huge position sizes, right? Now, one of the other things that we see, which we'll investigate on the lower time frames, is when we get these breakdowns, we get these retracements to these fair value gaps, these inefficiencies, right? We can see one here. Okay, now this, fair enough, is on the H4, but you can see the same one here on the H1 as well, which is the gap between this candle and this candle. So it's a 1, 2, 3 candle pattern. This is your fair value gap, the gap between there and there. The markets almost always rebalance these, right? Now, there's no saying when they're going to rebalance them, but what we're doing is we're plugging that in as part of our technical analysis, and we're saying, okay, if we have a bias, the price is going in a certain direction, then that's what we would target. An example of one that's going on now, let me just hide this, is here, right? We've got a daily fair value gap down here, which is what we're going to look at on the higher time frames. But just to give you some context about this trade and certainly about the short here, we're sweeping highs here, right, where we believe there's liquidity. Again, as these positions open, all these swing highs have stop losses above them. They also trigger breakout traders who are looking to play breakout plays, all right? But what we'll notice is when we sweep liquidity like here, right, When we leave an inefficiency on the downside, as we've done here, for example, price can often retrace to these areas to rebalance before then breaking down further and going to an ultimate objective. Now, the reason that I wouldn't be closing a short position here, and there's nothing to say I'm absolutely right, but for me, we haven't really interacted with a key level down here yet. We're getting drawn down into this fair value gap, this inefficiency below us. We've also got liquidity below these lows, which we'll see on the higher time frames. But in here, all we've got is this kind of thin move up. So it doesn't seem to be obvious where the orders would be in here, right? So we would expect a move down probably into this consolidation here, which would represent a higher time frame order block, and then eventually to the liquidity below these lows sitting down here. All right. So in terms of the thinking, and just to run you through some of the annotations as well, fair value gap, FVG, and then I place the time after it. So like with this one, for example, you can see FVG, H4. The FF stands for full fill. That means that this was a 4-hour fair value gap here. When we filled it here, we rebalanced it, right? We then had price breakdown. So this is what plays into our thinking. Now, what we're going to do is we're now going to take this. In fact, let's just highlight all of this here. And what we're going to do is we're then going to collect all of these into a group. And then we're going to hide them. Okay, now what we're going to do, we're going to go onto a higher time frame chart. Yeah, I'm going to start with the weekly. If you've got any questions, guys, as we're going through this, please don't hesitate to ask. You can always pop them in the comments. So the reason I've got this highlighted here, because this is a key area of interest for me in terms of the small consolidation before this huge breakout. All right, so what we're saying to ourselves is there's a lot of thin movement here. If price is coming down further, where's a realistic place that it's going to stop? Where have we got historical orders resting? All right, we know previously that there were buyers in here, so we would expect that to be the case again. So what are we looking at? All we're marking up here are our key levels. We can see here as we come and we set these levels, when they get swept and we get the breakdowns, then we normally get these corrections, which then go to search for liquidity lower down. All right. So we first took out these equal lows or relative equal lows here. We had this reaction, which caused price to come up to here. We came into a lower time frame order block. All right. We'd rebalance this fair value gap here on this drop. We've then come up, and then obviously we had this huge down candle here, this really, really bearish week. And then price has kind of been stalling to recover. Now, the key things that I want to note on this time frame here are areas like our fair value gaps, right? So we've got a gap between here and here, right? This is what we believe is drawing price higher, right? The market wants to rebalance these inefficiencies. So that's what we're looking at to draw price higher. We can see above it, which we'll look at on the next time frame down. We've got a daily one here as well, so we're looking at that. However, one thing that we can see quite clearly here, I'm just going to make this line a little bit thicker, is what's capping the market, right? So what's stopping the market progressing up, or what's stopping the market coming down? Now, for me, I'm very interested in this level here because we can see resistance, resistance, resistance. Now we've got rejected here, and now we look like we're starting to correct back down, all right? So now when we switch on to the daily scale, PA23, hey buddy, welcome to the stream. Hang on. Been doing this a lot recently. There we go. So now what we've got marked up on here, we can see our daily fair value gap. Again, that's the gap between this 1, 2, 3 candle pattern here. You'll notice that the wicks don't cross over, which leaves this inefficiency here. See, if we take these 3 candles, 1, 2, 3, notice how this wick here and this wick here cross with the body in the middle. That's the market being efficient, right? As you can see that in these moves here as well. When we get these inefficiencies, like these gaps here, price often comes down to refill them. So we've established that on the higher time frame. We've got our liquidity up here. We've taken our weekly level here, which we can see as we're now on a daily scale. We're saying to ourselves, well, actually, we can see how important this level is, right? So rejection, 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 right? That is a lot of rejections at that level. Now, there's different thoughts in terms of people will say, you know, the more you're knocking on this door, the weaker it's getting. But in the same vein, it's also showing a lot of selling pressure to keep price below this level. Okay, so as we've come up into here, our key points of interest now on a daily scale, we know we've got a daily fair value gap above, but we also have this fair value gap below. All right. We've got a daily fair value gap below. Now, the question is, are we coming down to rebalance this or look for liquidity lower down? This red dotted line here represents liquidity, so we can draw this up, make this clearer, and give this one of our liquidity lines. So if we start getting above here, right, then for me, I'm thinking that that's showing a lot of strength to get above this area that's provided so much in terms of rejections. Then I think we could really be getting drawn up into here. All right, this fair value gap. However, if we are holding below this level, we can see here we've got a clear picture of what's pulling us lower. So we've got this. Maybe we're looking to rebalance this before then moving higher. All right, in which case, what we want to see here, what I'd want to see, are these highs taken. Yeah, so price comes up, clears them out, and then finds support around this level here, right, where we've obviously had so much resistance. You know, classic support and resistance flip, filling this fair value gap would take out the liquidity below these lows, which can generate a move higher. Then taking out these highs, but showing us the price isn't ready to reject back down, what we would look for is either a retest of the breakout line, yeah, which would say be here, breakout here, retest this, or we'd be looking for some kind of fair value gap in here for price to draw down into before it then moves higher. All right. So that's my current thinking on that at the moment. And almost always, I like to see how Monday's range plays out. It often gives us a lot of information heading into the week. So I think what we want to do is we want to be patient at the moment. As we said, we're looking for this kind of correction, but we don't know if we're going to face a deeper correction down into this liquidity, all right? But we do know that price is getting drawn down now. We've shown weakness here, all right? So as we now cycle down through the time frames again, and we go here onto the 4 hour, we can see a lot more data, right? Now, remember what we said in terms of these fair value gaps, right? So as we refine this down, we can see we've got this one here on the H4 as well. We can see prices come in, hasn't completely filled that. So again, this becomes a likely target to the downside. We can see very, very clean and clear local levels of liquidity, right? So let's mark those up. And one thing that always really, really grabs my attention are equal highs or relative equal highs, right? So that means they don't have to be perfect. What we're saying is if price has stopped there twice and we've got a level that we can hold, then we've got a target, right? We're saying if we believe there's a lot of liquidity above there, then price is often likely to run there. Now, so Devon, I'm holding my short position. Yeah, I'm, again, not telling you what to do, buddy. I think it seems smart to me. It seems like there's liquidity lower down. It seems like we really could either get a flush, certainly of these lows. Yeah, so again, just a lower time frame view of what we just discussed. So we would take the liquidity below these lows. Okay, these did the same to these lows here. So as price comes down, we want to see liquidity taken. Then what you want to see really is a pattern like this, or what I look for. Okay, to let us know that price is considering a move higher. That's price comes into a low. We then see a sweep, right? A clear sweep of that low. Then what we're looking for is for price to break above the high, this high that sweeps the low. We want a strong move above that. Yeah. If we get that strong, energetic move higher, then we're looking for pullbacks onto this, which I would call a breaker line, right? Just a term that I use. It's exactly the same as what other people use, support, resistance, breakout line, etc. But I'm looking for it with confirmation. I want to see price come back up. I want to see liquidity swept from the lows, and then, like I said, an impulsive, a strong, energetic move above that high. I then look for entries on this line here, or, like I said before, I'm often looking to find a fair value gap that will be a little bit deeper. All right. So again, that seems like a clear play to the downside. What happens if we're looking at it the other way? What if we do kind of stop here? Because one thing to consider on this level is that we've recently filled this fair value gap here on the 4 hour, okay? So maybe price doesn't come that deep. We do start to see a correction. I certainly wouldn't be looking to jump in here. I would actually be looking for price to do something like this, right? And then I'd want to see again those highs run. And if we get a pattern like this, right? So again, we've run clear highs. We've taken out the liquidity above these equal highs here and the liquidity here and here. And then this would represent our breaker line. Below here, we would then be looking for a retest of that line here, or a fair value gap in here for price to draw into before it breaks down further. Obviously, if we don't get that pattern or that style of pattern and price continues in a bullish structure and continues to hold up here, then the market's showing us strength, all right? In which case, then that obviously changes our bias. We don't want to go in, we want to go in with an idea of what we want to see, but me personally, I like to be in a position where I can look to play it both ways, right? So again, if we come up here, we get this rejection, right? Then we can see that we've got a high probability set up to the downside. However, if we get above here, yeah, and we start to hold, then I'd actually be looking for the opposite, right? I'd be looking for a small run lower, right? Something like this. Now, let me tell you why. Because if price comes up here and it starts to hold, right, then quite often what it's going to do is fake out and move to the downside, again, purely to generate liquidity below these lows, before it then has this impulsive move higher. If that's the case, then as we said before, we're then looking left and we want to start marking out some targets, one of which would be this, right? This key swing high here. And then we'd be looking for price to get drawn up further into this fair value gap. And obviously what you can see with inside this daily fair value gap, if I zoom in a bit, is that we've also got this 4 hour one here, right? So at the moment, for me, there's kind of compelling arguments for both cases. I think it is showing weakness again, the fact that we've rejected up here. It does look like we're pretty much just coming up to take out these highs. And then from there, you know, for me, we're too close to this to go short right now, right? I think if you've held those short positions over the weekend, I think it makes sense to stay in. But to have a clear plan in place, you know, if we drop this down onto the hourly, for example, what I was looking at this morning was the idea that if this is going to push lower, then we're probably going to pull up into this fair value gap, which we've done here, okay? But then now we've started to break down from here. I think I'd be conscious of these highs. I think if price was to get up and start establishing itself above here and start to push higher, yes, we could just be looking to fill this, but I don't think there's any harm in kind of taking profit around here and saying to yourself, okay, we start pushing up here, say you take some profit here, fine, what happens? Okay, price comes up, it starts to break down again, right? Again, we're just looking for the same pattern, all right, which is this. And then from here, all we say to ourselves, okay, so we've offloaded some position, we're in profit. Okay, our assumption was wrong. Price isn't moving higher. It's now looking to break down again. This was just purely to generate more liquidity to the downside. Then we can get ourselves back in here. So let's say we're out of the position here. We're back in here. Sometimes you can get yourself in a better position to go down and you can manage that position lower down. However, again, not to try to tell you what to do. It's completely up to you and your strategy and how you look to trade these markets. But for me, I'm happy to book profit little and often. And then that way you're using that money over time to compound. When you're then not touching that money, right? And that's one of the real arts, is not touching that, letting that money compound. You're not upping your risk at all, but you're upping your returns over time. And for me, that's really kind of the safest and kind of not shrewd. Shrewd is the wrong word, but I think that's what you see a lot of the very best people do that build wealth, all the way from Warren Buffett down to modern day traders. Is you're building wealth over time, little, often. Don't try and go out and get these crazy big wins. You see these, 20, 50, 100x bits and pieces. Just, they're great. If you get them, fantastic, but it's not very repetitive, right? You want to get yourself in a position where you can just make little and often profits every day or a couple of times a week. And then you look to compound that money over time. So let me show you very quickly the idea behind this short position from the weekend, just so you can kind of get an idea of how this would be executed, right? So pop my current position back on. So what we can see here, and now this has been rebalanced, this 4-hour fair value gap, so I'm going to delete that. However, before I do that, sorry, that was a big part of my thinking. We had this untapped liquidity, this 4-hour fair value gap hadn't been filled. Henceforth, that's where the target of the short is, exactly on this fill here, right? So I'm going to get rid of that now, because once the fair value gap has been filled, then we say the market's rebalanced, so we're happy to move forward from there. What we can see here is we took out this liquidity here, which afforded us a slight move higher. We came into this key high time frame level here, leaving this liquidity above this naked high. Price has then broken down. As we've taken out the lows below here, we've driven into a low time frame order block. Price has then had this run higher. However, again, we can see as it came up, it had this impulse move higher, but look how it failed to hold it, right? This was retraced almost immediately. Then when price broke down into here, we've got our sweep up here, price breaks down, takes out these lows, right? What we're then looking for is an inefficiency to trade into. In this case, we've got our 15-minute. So let's see what we've got here. Price breaks down, takes out these lows. This is where we have our shift in market structure. This is where we have our market structure break, when these lows are taken out here. Then we're saying to ourselves, okay, so we've had this. When we had the market structure shift, so let's mark this up as well so we can see it clearly. Now our thought process turns and we say, okay, look at the impulse move through it. Like I said, that is a big, powerful bearish candle. That's punched its way through. So all we do in that instance is we're marking up our fair value gap, which is the gap between that and that. We're looking for price to break into here, yeah? And then on a lower time frame, I like the 3-minute, but also as well, you know, you can do anything from the 5 and further down. You can then refine these entries, because I understand a lot of people don't have the time to sit on low time frame charts, 1 minute, 2 minute, 3 minute, etc. So just to show you, you can get these levels on your 15-minute chart. We're respecting the same swing high for our stop loss, right? And the only difference would be that as you were looking to trade this, yeah, you could be then looking for further confirmation within here, all right? So here's the fair value gap that we pulled into. We can see price sweeps the highs here, right? So this then becomes our breaker line on the low time frame. This was our sweep of these highs. So like I said before, we're looking for the highs to be swept. This is for a short setup, obviously. We want to see the highs swept, the low that sweeps the high, closed below, which we get here, yeah? And then we're looking for price to return to a fair value gap. Let me just make that a different color so that really stands out. And can you see here how the very next candle spikes into this? That would be your entry. I took this on a 15-minute, but just to show you the difference, if you can scale down onto these, like I say, I don't trade weekends really. I was out with family, but the setup just looked like what we were waiting for, is what we were hoping to, what I was hoping to catch on Friday. I thought it makes perfect sense to see that weekend purge. So we came up into here, very, very small position, into this level, right? So I've taken this on a 15-minute, and we've got ourselves a 3.2R trade, all right? So like I say, that was the exact level of the daily fair value gap. That's what we were looking to trade to for this to rebalance. So what would have been different here? So let me remember this, 3.2R, right? 3.2R, because we went in on the 15-minute. 3.2R is a fantastic trade, right? I know people out there, you're looking for your 10, 15s out, and I know some amazing traders that do it as well. Like my boy Trader Dank smashes it out of the park. But you've got to realize the experience level and the amount of time that you've got to spend behind the charts. So 15-minute for people is a lot more manageable. Like for me, for example, I'm out Christmas shopping with some family, can still get in there, get on the exchange. I've got my levels set, my alerts are there so that I can still enter a trade. However, what I would do if I was at my desk Monday to Friday is I'd be looking for this, right? And then I'm looking for the sweep of the high, the low that sweeps the high to be closed below, which is this candle here, yeah? Now, as we said, remember that that last trade was 3.2R, right? Let me just pop this on a second because I want to mark this level so that we're targeting the same level. right? So when you're refining it down to the lower time frames, you can improve your risk to reward, all right? So short position here, our entry is actually right here. So we're entering on the low side of the fair value gap. Oh, help if I use a short position. So blue box. Now, with this, we can target this swing high, right? Because if we're correct, price is drawing on liquidity here, and this is now getting room for the move lower. Why would we be so certain of that? We're never certain, but all we're saying is strategically, if this was the run on liquidity, the takeout of these equal highs, price has now broken down below the low that took these highs, then the chances are we're looking to rebalance lower. We've got our fair value gap target down here. If we trade that all the way down to that, as we see that we got, now we've got a ominously 6.66R trade, all right? So you can see you can double the risk to reward there as well. The other thing you always want to be aware of when you're trading the low time frames, right, is to make sure that you're aware of your position sizing. So for that, I use my very, very good friend and fellow Birdnest trader, Razoon's position size manager. You can find this, guys, I believe. I'm not sure if it's live scripture. I think it is actually Position Size Manager by Razoon. That's RAZZOORN. Definitely go and follow him along with the other guys over from the Nest. Really exceptional group of traders. It's a real pleasure to work alongside them. And a real varied bunch of skill sets, right? From algorithmic system builders like Pedma 7 through to great volume scalpers and day traders like Razoon. But he's got this awesome indicator that he's made, right? So I'm going to flick this on now and show you on the charts what it does. So I've clicked it on, yeah? The first line that I place is my entry. The second line I place is my stop loss. And the third line I place is my target, right? Boom. Now, what I do is I offset this in his settings, yeah? So that you get this, but I project it over to the right, yeah? What you can do is just have it without any offset, and it will project it right on here for you, all right? But what we can see is this box down here, right? Now, for a basic kind of competition entry or for your standard kind of account, just don't the default settings, sorry, are set to $1,000. Doesn't really matter, but you can see here and you can see your leverage as well, right? The really important thing about this is when we're looking down here, we can see if we want to set our account, or if we want to set our risk at 2%, yeah? You go in here, your risk percentage is set at 2%, yeah? And then you can set your leverage as well, which obviously affects your margin position. Now, if I want my risk to be 2% here of $1,000 position, meaning that if I lose this trade, that's a $20 loss, yeah? If I want to open this position here with those parameters, it tells me my position size needs to be $13,815, right? My margin is $13.81 because I'm on 10x leverage, right? Because with a $1,000 position size, yeah, I need to make sure I've got enough leverage on the position to get that. So from there, I wouldn't have that much leverage, and I wouldn't want to be using that much leverage either, right? So what I'd be looking to do is I'd be looking to downscale this a little bit more, and I'd be saying like, okay, actually, what are we doing if we're looking at this at 1%, right? That's within my parameters of risk, yeah? But also what I can see here is $6,900 position. If my fees are 1/3% on that, yeah, that's going to be like $30 to $35 in fees. And my P&L here is only 67. So you're going to lose a lot in fees, right? Now, the reason I really wanted to put this across is because I genuinely don't believe, or I've not come across an indicator, right, better at capturing this than Razoon's, right? So let me just pop his name down here in the comment. Right, so you can find him on Twitter, have a chat with him. You can obviously find him over at the Nest. You can find a free trial down in the description. 7-day free trial. Come along, have a chat with come and have a chat with all the different traders. Find out what kind of trader you are, what trader you want to be. Come and engage with the community. This kind of time of year as we're running into Christmas is an amazing time to be building. You know, that was the whole point of Congress, really start getting people back on their feet and saying, look, the best time is now. Refine your skills, sharpen yourself up, look for a better future, right? If it's something that you're interested in, then make sure you really, really pursue it as you would do any real goal or business. Set yourself structured goals, targets, find a good community to work with, really, really push yourself and make yourself accountable, right? But before I digress too much, do go and download this, right? Go and interact with Razoon, go follow him. He's an absolute dude, an exceptional trader. But this will save you a ton of time, right? I now know as I go into this position, if I for a 6-hour trade, I can basically double my money, right? Which when you're sitting there thinking that, hang on, surely if my risk is $100, surely a 6.66 would give me $660 back. You need to be aware of what you're paying in fees, right, for the position, because this is only a 0.97 scalp, right? Your risk is only 0.15%. The more that your percentage goes up, yeah, the better it is for you in terms of your position size, meaning that you're going to pay less fees. And also make sure that you're checking the asset that you're trading, right? Again, because they have different margin leverage costs. That means it costs you a different amount to borrow different assets. Like BNB is very high. I think it's 4 or 5 times higher loan percentage on that leverage per day than Bitcoin, for example. So make sure you understand that. Now, before I digress too much, let's just shut this off for a second so we can make this nice and clean. Hopefully that kind of makes sense in terms of what we're looking at. And then when we take this back to a daily scale, all I'm ever asking myself is, where is price reaching for? Yeah. It's so important for us to have a high time frame bias, and obviously it's very difficult like in here, right? But actually when you zoom out a little bit and you're saying to yourself, look at the extremities, yeah, swing highs and swing lows. This swing low, why? Because this candle and this candle, the candles that flank it, are both not as low as this one, so that makes a swing low. Same as this isn't a swing high, this is, because this one is flanked by 2 lower highs, right? Same as this one, by 2 lower highs, okay? That's a swing low, exactly the same principles, right? So what we're doing is we're looking for those, then we're saying to ourselves, okay, what does price do when it interacts with them? Because then when we look on there, that's what allows us premise to think of. So if we're breaking down here, I'm very simply saying the fair value gap on the daily is drawing price lower, and the obvious liquidity sits here, okay? Now, something else, which is a really, really good way to consider this, and N0KR1PT0, I will pop that up in a second, mate, the kill zone indicator for you. So, which, I'll mention to people as well, actually, because I do trade specific times of day. Not saying people have to. It's very much an ICT concept that I learned his original mentorship, and it's something that I agree with. It also helps me stay focused around certain times of day. But just before we go on to time of day to close this session up, I just wanted to show you in terms of what another ICT concept actually, or certainly the first place that I kind of came across it, in terms of reading the days, right? So let's just look at this just completely at random, right? But let's say these lows here, right? See when these lows got ran here. We're saying to ourselves, okay, well, now we're starting to feel bullish, right? Now, you don't have to just jump in here, although we do get this lovely bullish candle, right? What I was looking for here is when we came up, set this low, high, higher low here, this is when I'm starting to get interested. Then when we have this bullish hammer candle here, and this body engulfs the prior, so in terms of bodies, it's an engulfing candle as well. Then from there, I'm starting to feel bullish, right? Now, where are my targets? My targets are immediately here, here, and here. Especially these ones being relative equal highs, 1, 2, 3 areas of liquidity here, okay, which is really, really key. So think about it like this. When you're looking at your candles, what you want to see is you want to see the day open, trade lower, and then go higher, right? So let's say we wait for that confirmation. We now say, okay, we've got our engulfing and our bullish hammer candle. We've got liquidity above. We believe this run on liquidity below here, yeah, has now fulfilled sell side liquidity, which is the liquidity of the lows, and price is now pushing up to buy side liquidity up here, right? Via this high and this high. So on this day, what do we look for? Price to open, trade down, and trade higher. Our first target's always the prior day's high, right? Then we move on to the clear swing highs. So the following day, what happens? Price opens, trades lower, gives us our opportunities. We wait for our market structure break to the upside, trades higher, past the prior day's high, and almost into liquidity. Now this day here opens, trades higher, then lower, right? Then when we close here, we're saying, okay, it's a corrective day. It's kept us out of the markets because it opened and did the opposite of what we wanted it to do. We want it to open, trade down, and then go higher. This opened, traded up, and then went lower, right? So then on this day, we retain our bullish bias. Why? Because we've still got liquidity to attack here, here, and here. So this day's opens, trades lower, perfect. We look for our low time frame setups in there. And in fact, let's highlight that area. And then we look to trade higher, all right? So to show you what that looks like very quickly, we pop this onto replay. Like we said, so we've got our daily bias. We're going to put on our session breaks, right? So this breaks the days down for us. All we need to do with this, we just go to this little sun emblem down here on the bottom right, and then you click session breaks here, okay? So then when we've got our session breaks on, right, and we've got our box here, remember what we're saying. So before we come into this, right, we're now in our box. This is our area of interest, right? We're now looking left and saying, okay, actually, we can see this naked high here. Yeah, that's what we're interested in. This day, we can see how we set. We didn't quite tap that high, so that becomes our first target, right? And then we've not got fair value gaps in here, so we're being drawn up to take out this buy-side liquidity here and here. Now, when we've done that, we've retraced into this box, yeah? Now, remember what I said about this day, yeah? Price opened, so there's our daily open. Then what happened? Price traded up, came down, and then never gave us that bullish structure to go higher, all right? Now, this is what this fine gentleman or lady are asking about here, which is the kill zone indicator. Now, I don't have any affiliation with this gentleman at all, or again, lady, but I find this an excellent indicator, right? This is for ICT kill zones for anybody that studies that. I have studied his original material, which I think was 2017 through to 2019. He's got a new core mentorship course, 2022, one of the real kind of godfathers of price action. You know, personally, I like to study a broad range of people. I think he's one of the best, but I would always keep your horizons open, right? And I've built a lot of systems over the years based around moving averages, volume profiles, other bits and pieces that have been very profitable, even basic candlesticks and candlestick patterns. So you don't always have to kind of bottleneck yourself or kind of put the blinkers on, but definitely there's a lot of very good information. And one of those is about the times of day to trade. Now, it does everything for you automatically, so you don't have to adjust anything on here. You can choose which kill zones you want on, Asia, London, New York, which is your New York Open, and then your your London. And then all you're doing is you just choose whether you want the central bank dealing flout on the dealing flout color. I turn them off, right, because it's more for obviously our traditional markets. So for here, all we're saying is we're looking for price, yeah, to come into this area here. I trade this from the London Open, yeah, which is the morning session, into the New York session down here. Now, sorry, buddy, as well. Let me just confirm that as well. It's by a chap called Tradinator. You can always find him on TradingView. He's got the Terminator, got Schwarzenegger from the Terminator on there as the logo. And like I say, I've never really interacted with the guy, but from what I've seen, he's got a very, very good handle on trading, and he builds an excellent indicator. So absolutely credit where it's due, and good luck to him. So if you do interact with him, tell him BC Richfield says hi. Not that I'm sure he might even remember me, but yeah, he seems like a real dude. So back into our story here, right? Let's just mark up the daily open on this side, right? So we can see we've got our daily open here. Now, remember what we said, yeah? Let's just write that in here. So daily open here. Price, we want to see price break down, get into a bullish structure, and then trade higher. But we don't. We trade down below it, and we don't recover it, okay? Now, we're saying, okay, fair enough, price is coming down. Now when we look left, it makes sense. See this big inefficiency we've left? So now we're saying, okay, well, let's be patient here, right? We either take trades within our area. For me, that's between the London Open here and then London Close. I do sometimes trade the PM session in New York as well. But for me, I'd be leaving this here and saying, okay, although I do really like the look of this, again, same premise. Price trades down, what have we got here? Relatively equal lows, right? So we're saying price then purges the liquidity of these lows, yeah? So it takes them out here. We then come up to here, right? So this is the low, so this is the high that sweeps that low, but we don't really get that close above it. We don't show that momentum, and then we're outside of our trading zone, yeah? So I would leave that. Now, the other thing that I'd be looking to do, and I would go into a 5 minute on that, right, as well. If we had any kind of impulsive close above there, then I'd be looking for the 5 minute for sure, all right? But what I'm really interested in here is when we come in, we've got liquidity down here, but the most important thing, which I just said, is here's our daily open. Do that with the horizontal actually, because then it'll all be set. So here's our daily open. What do we want to see? We want to see price trade down, right? And then break out above. Perfect. Price has come down for liquidity. Now it's broken above. Now we're saying to ourselves, we just want to see our liquidity sweep, right? So we see we get one here, right? But price doesn't come and close above the high that sweeps the low, right? Then we get another sweep here of these lows, and we say to ourselves, okay, well, where's the high that sweeps that low, which is here? Now we see we get that impulsive close through it, right? You see that candle. That candle's forceful move above. It's in the New York session where we get a lot of movement because we get a lot of volume in this session. So we've swept the lows, broken structure to the upside. What can we do now? And again, you don't have to use the 1 minute for this, right? I like using the 1 minute because it gives a lot of data, all right? But you can use 3 minute, you can use your 2 minute as well. And actually, I think that might have just kicked us back to the beginning anyway. Trading view just being a little bit twitchy. Yeah, that did not enjoy that there, old trading view, unfortunately, which has kicked us back out. But the premise of what we're discussing is the same, right? What we're looking for is we're looking for these reactions down at the lows. We're looking for levels to be swept. And with price being fractal, all we're looking for are the same kind of patterns on different time frames, right? So as we push down here, we're looking for the same thing. Key levels broken here, liquidity taken below these relative equal lows, impulse move lower to take liquidity. Price comes up. What happens? Set this low, set this high. What do we get? We get an impulse move through this high, retest it, this breaker line here, and then price takes off. Where would we target? Quite simply these highs, all right? So I hope that gives a little bit of insight. One of the things I would have liked to have finished that trade. Unfortunately, trading viewers kicked us right out, but it is what it is. One of the other things I'd just like to say, guys, is do keep an eye on the DXY, the dollar index, all right? I like to use this. Imran Khan, never late, buddy. It'll all be up for recording, mate. I'm going to be shooting off this in a moment, but it will be up on recording. And as always, come and grab me around the nest or on Twitter, and we'll have a chat through anything. Always some good questions from Imran Khan. So I've got this high time frame level here, this red line on the DXY. This is really interesting for me. We can see it capped price here, came above it here, ran under this over and under move before it came above, found support, had this impulsive move higher. We retested this area here, giving it extra validity before we pumped again. Now, as we've come back down to this level, 1, 2, 3, 4, 5, 6 times trying to break and hold below it, which we haven't managed yet, okay? So that's a key area. If the DXY is dropping, then we typically expect a little bit of a pump in risk assets and vice versa. Although be careful with it at the moment, the correlation hasn't been as tight as it has been for Bitcoin. Where you do get that beautiful correlation, and it is very, very similar in terms of being counter correlated, right, is when we see ES, which is our S&P 500, or the NASDAQ, which are risk indexes, or not, but they're indexes or indices, which are a collection of different companies. The NASDAQ focuses on technology. The S&P 500 is the one that we use as a correlated asset along with the NASDAQ. which is this one, NQ, or the NAS 100 USD, depends what type of contract you're trading. And then what we're saying is if the dollar index is showing strength, we expect weakness in this. If this is showing weakness, we expect strength in the dollar index. All right, so they're counter correlated. But Bitcoin will typically follow ES. Again, it's never 100%, guys. You have moments when they're correlated, other moments when they're not so much. But just you start plugging these bits and pieces in, and then we can use that to our advantage. So take a look at Bitcoin. Make sure you've got your key levels marked out. For me, I'm really kind of saying, okay, well, if I want to be getting bullish on this, I want to see us above this thick red line here. Yeah, if not, I assume that we're correcting here. This is our first draw. Yeah, so this is what's drawing price lower. We've got this liquidity sat here. If we face a deeper correction, we need to be aware of orders that can be sitting here in this order block. But then ultimately liquidity below here and liquidity below here. If, however, this holds these highs and we start breaking out to the upside, then again, we need to realistically see a hold above this, in which case we then start looking to work out these liquidities here and here, and any equal highs that we've got over there as well. So look, I hope you found that useful today, guys. Trying to keep them a little bit shorter and punchier. Going to be back on Wednesday live with everyone. We're going to be doing alt requests and also keeping an eye on this at the moment. Please be aware of the news events this week. Get yourself onto financialjuice.com or one of the similar economic calendars and make sure you're aware of everything that's going on, because there's a lot of very key events happening this week that can shift the market. So please do trade safe. All right. So look, a huge shout. I had loads of you on the live stream today. Really do appreciate every one of you. Chedai Cole, Tino, great to hear from you guys as well. Hope you have a fantastic week. And yeah, ICT kill zones indicator. Thanks for the new tip. Yeah, do it, guys. Really recommend this. Real closing thought for you here, because a lot of people don't consider time and price, or certainly don't consider it a lot. What I would say is, for me, as someone that trades pretty much consistently the London to New York, is if you go back, and again, more so in the weekdays, obviously, but go back, pop this indicator on, right? Green through to green, take these levels and look how often, right, you're getting these key moves within them. Green to green, the corrective move that started this down move, all right? Green to green, the start of this move higher, the consolidation that led to the pump. Green to green, actually we just got some chop on this day, but then again, look at this, the London to New York session again, covering these key moves, right? The idea is about the session opening at the highest volume areas of the market as well. So always test this, and test this to breaking point, guys. You want these things to be really robust. Triple dumps. Let's have a look on here. Resume indicator not available on TradingView. Okay, mate. Well, pop along to the Nest and drop him a message there in one of the chats, and I'm sure he'll be happy to share it with you. And also, you can grab him on Twitter. All right, guys. So that's Razzoon, RAZZOORN MG. So no longs and only shorts. No, definitely not, mate. I wouldn't say that. I'd say we're in a little bit of a position at the moment where I'm not really looking to position myself. I think we're either drawing back up into this fair value gap here before we purge lower into this one on the look for liquidity. But for me, the move was earlier into this. So I'm going to wait for Monday's range to develop, and then let's see how we kind of respect those Monday highs and lows. All right, guys. Thanks so much for tuning in. Been a pleasure as always. Have a fantastic week, and I'm going to catch you around the Nest.